Ladies and gentlemen, good day and welcome to Ideaforge Technology Ltd Q3 and 9 months FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Parth Patel from Orient Capital. Thank you, and over to you, Mr. Patel.
Thank you, Michelle. On behalf of Orient Capital, I welcome you all to Ideaforge Technology Ltd Q3 and 9 months FY24 earnings con call. From the management side, we have Mr. Ankit Mehta, Chief Executive Officer, and Mr. Vipul Joshi, Chief Financial Officer. I hope everyone had an opportunity to go through our investor deck and press release that we have uploaded on exchanges and the company's website. A short disclaimer I would like to say before we begin the call. This call may contain some of the forward-looking statements which are completely based upon our belief, opinion, and expectations as of today. These statements are not guarantee of our future performance and involve unforeseen risks and uncertainties. With this, I hand over the call to Mr. Ankit Mehta. Over to you, sir.
Parth, I hope I'm audible.
Yes, sir, you're audible.
Good morning, everyone, and a warm welcome to all the participants. Thank you for joining us today to discuss the Q3 FY24 results of Ideaforge Technology Ltd. Let me first take the opportunity to wish everyone a very happy new year, although it's a bit late, but this is the only opportunity we had. On this call, I have my colleague Vipul, as mentioned by Parth, who is our CFO, and Orient Capital, our investor relationship partner. And I hope that everyone has had the opportunity to go through the investor deck and the press release we have uploaded on the exchanges and the company website. Presently, I'll be providing you with an overview of our strategic initiatives and the notable milestones we have achieved since our last earnings call. At the outset, I want to share some good news with you. We have improved our global ranking as a dual-use drone manufacturer from 7th position last year to the 5th position this year for the same ranking organization. Additionally, we have been officially certified as a great place to work. Though this development happened recently, I believe this would be a great forum to share this with you all. As we celebrate these milestones, it energizes us to redouble our continued endeavors to achieve excellence. Innovation remains at the core of everything we do at Ideaforge, and the grant of 7 new patents is a testament to this. On the development front, we have reached the prototyping stage for many of our technology and product initiatives, while initiatives like performance improvement on existing platforms and the addition of new capabilities will result in tangible advantages in the shorter term. Initiatives for larger platforms like the middle mile logistics platform will take a relatively longer development cycle. All these initiatives are on track and we are confident about the progress we have made on them. We will keep updating on new developments in the future. As part of our endeavors to unlock the full potential of drone technology, we have conceived India's first drone innovation platform, which will help create a world-class collaborative drone ecosystem in our country. At the heart of this ecosystem will be Ideaforge's drone platforms and control software, which ensure performance and reliability while delivering safety and autonomy in the field. On top of these two, industry players will be able to integrate innovative payloads to address a large number of use cases. They will also be able to leverage the application marketplace that is being developed by Ideaforge to provide their software solutions, and even cross-leverage these solutions from other players and Ideaforge itself to deliver automated outcomes to end users. This innovation platform approach, coupled with servicization of the drone technology, will ultimately result in increased availability of drone solutions and will provide flexibility of consumption to the end customer, thereby accelerating the growth of the industry and all of the players involved. In this quarter, we have also seen progress in our strategic diversification initiatives, we have shipped Switch and Netra V4 Pro systems to the US and started product demonstrations and trainings with customers and value-added resellers there. These demonstrations are aimed towards educating customers about these platforms and their capabilities, and to start building a sales pipeline in the US. For the drone as a service business, we are seeing early billings from a few anchor customers. As the technology and market mature, I am confident that drones will be an integral and ubiquitous part of our country's governance and security infrastructure. We are confident that these early encouraging signs will grow into a meaningful business in the times to come. As we delve into the operational and financial updates for this period, I want to share that we have also delivered a large defense contract to a customer in full and well ahead of schedule. This is a testament to our ability and commitment to deliver best-in-class products and solutions to our customers that act as force multipliers for carrying out critical missions in the field. I will now discuss our financial performance. Consolidated revenue from operations for the current quarter stood at 90.9 crores. The gross profit for the quarter was 48.9 crores at 53.7% of revenue. EBITDA for the quarter was 26 crores at 28.8%. PAT stood at 14.8 crores with a PAT margin of 16.3%. For the 9-month period in FY24, the revenue from operations was INR 211.7 crores as compared to 147.3 crores in the same period in FY23. Gross profit stood at INR 112.8 crores at 53.3% of the revenue. EBITDA for the 9-month period in FY24 stood at 65.3 crores with the EBITDA margin of 30.8% as compared to INR 52.1 crores in FY23. PAT stood at INR 34.6 crores at a 16.3% margin. Our order book now stands at 175.8 crores as of December 31st. We have surpassed our last financial year's annual revenue in the first 9 months of the year. This is in line with our projection of substantial growth of revenue in this FY. This further accentuates our belief that our business cannot be reviewed on a quarter-on-quarter or a year-on-year basis, and should be holistically looked at by including our efforts on diversification and product development. Thank you for your attention, and I look forward to address any questions you may have.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may please press star and 1 on the touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Renu Baid Pugalia from IIFL Securities. Please go ahead.
Yeah, hi, good morning team, and congratulations for the good step jump in performance. My first question is just to understand a bit more about how is the order pipeline and the order build-up position looking for the next 6 months, because that is where the visibility for next year will depend. So if you can share some inputs in terms of projects where we are already submitted bids or certain repeat orders, where are they in terms of finalization? And based on your internal assessment, what could be the likely order book at the end of the current fiscal for next year? That's the first question. Thank you.
Thanks, Renu, for the wishes and for the question as well. Just wanted to highlight that one can also see from how this year has panned out for us that the opening order book at the beginning of the year is not necessarily a full reflection of our performance potential in that year, because in our case, many a times we get opportunities in between and we are able to build them as well, given that we have adequate capacities and a very good planning engine to be able to execute those. Having said that, we are at any point in time tracking a fairly large opportunity pipeline, which is in various stages of conversion, including all the aspects that you mentioned, which implies repeat opportunities, which implies opportunities which are in the pipeline. And as you are also aware of the make programs that we are working on. So all of that continues to be actively being tracked. They are all in various stages of progress with forward motion. However, to talk about any specific opportunity may be a bit challenging at this point in time, barring the fact that we have already indicated that prototyping of our tactical system is in advanced stages, and we are getting closer to some of those developments. Of course, it will take several iterations, but we are over some of the important phases of early design in those opportunities. So we are constantly at work. We have done a lot of trials, demonstrations, and several opportunities are both under evaluation, and several of them are coming up for evaluation in the next few weeks.
Right.
And
so based on
what
your
is also there, Renu, is that we don't just have a pipeline that is centered around defense. We also have a very healthy civil opportunities pipeline, and that again helps us quite a bit in terms of ensuring that we are able to bridge some of these gaps.
Right. So this is where I was coming to, that irrespective of defense, non-defense, but materially, as in we need to have what is the visibility that you have that projects which would be in advanced prototyping stage for developmental orders or where repeat orders are under discussion after deliveries. So that order pipeline, how would that look in value terms or potential orders where we could be L1 in your view, depending on how the competitive intensity for those particular projects are? So any color that you can give in terms of quantifying some of these values which may emerge in L1 pipeline or in repeat orders over the next 6 to 8 months?
So, Renu, the way I would sort of broadly classify the way we sometimes track it internally is in the forms of tracking certain large deals, which can at times be upwards of triple-digit numbers, and then look at a run rate pipeline as well. So we typically track it in that fashion, and we have opportunities in both the buckets in a fairly healthy division. But I'm not at the liberty of saying anything more specific.
No problem. Second question is in line with the investments required for the Make 2 program. Can you share update in terms of status on team ramp up and by when do we expect to? You mentioned on multiple iterations which are underway. But do you think some of these Make 2 programs could go in for the initial prototyping display to customer by mid of the next calendar year, or it could be slipping towards the end of next fiscal year?
I think, definitely there is a need for us to demonstrate some of these platforms within this year itself, this calendar year itself, which we are currently in. So those are the timelines that we will have to meet, and we are aggressively tracking those timelines. And in terms of team augmentation, we have added almost 72% new team members on the development side, and of that, about 15% were added in the last quarter itself. And on top of that, we have gone ahead on a good hiring spree from tier 1 colleges, and have been able to augment talent from a lot of world-class industries in our company over the last quarter or so. So again, this is a very good talent pipeline that we are tracking, and we are hoping to make sure that we are able to build a world-class team that can continuously deliver on innovative technologies.
Got it. And lastly, in terms of you did mention about getting early in terms of monetizing drone as a service opportunity. So where do we see these revenues scaling up in the next 2 to 3 years? And can you share examples in terms of the applications where you started to monetize these, probably on the civil side of the business? Thank you.
So, in terms of revenue scale, overall, the way we track, or the way we look at the drone as a service business is, in general, it to become a part of our overall software as a service, drone as a service, and services revenue bucket. We are, looking at getting into, over the period of next 3 to 5 years, into double-digit numbers cumulatively on that bucket, and therefore, that's a target that we are tracking. Hopefully, it will be significantly higher. However, in terms of the kind of use cases for which they are being leveraged, I think law enforcement is going to continue to be an important use case there, along with various GIS applications.
And Renu, just to add, Vipul here, basically, this is still our early green shoots of validating the model. We are still prototyping as to how this model will really work out. We are testing our background app as to how it will work with our consumers on the field. And the overall intent of moving to a franchise model is all work in progress at the moment, and all of that will fructify in the coming few quarters.
So this would be based on a similar model that we had piloted in Dehradun, or are we looking at other cities as well in terms of exploring and penetrating with these kind of services?
Yeah, absolutely.
Got it. Thanks much, and best wishes, team. Thank you.
Thank you, Renu.
Thank you. The next question is from the line of Dipen Vakil from InCred Equities. Please go ahead.
Thank you for the opportunity and congratulations on a great set of numbers. So my first question is, sir, can you tell us about the order book split between, say, drone and civil in 3Q?
So, Dipen, thank you for your wishes. But we haven't actually looked at it from that perspective at this point in time, so we don't speak about that at this moment.
So, okay. So I just wanted to understand, is there any difference in the execution timeline between, say, a defense order or a civil and an agri drone, or everything is the same at around 12 to 15 months?
So, Dipen, what happens is that typically when it is a very large opportunity that comes from mostly defense opportunities, they come with significantly longer delivery timelines. For example, we have opportunities that were expected to be delivered in 2 years, and some of them were expected to be delivered in a year or so. But typical run rate opportunities that we get from civil and several defense customers as well, they may not have that longer timeline. They will typically have a shorter timeline of 3 to 6 months. So that split varies by the nature of the order and the volume of the order, more than defense or civil.
So, Dipen, Ideaforge doesn't serve the agri market. Our civil is typically distributed between mapping and surveillance use cases.
Got it. Thank you for the clarification. So, just wanted to understand a little bit more on your order book, sir. So your order book to trailing 12-month sales is now down to less than 1 time. So are there any order pipeline in, say, near term in 4Q, and do you think you'll be able to close your order book cover to over 1 time by the end of FY24?
That is... So, obviously, there are things that are expected to close in the present quarter as well. Having said that, whether it will be one-time trailing revenue or more is something which I will not be able to comment at this stage. And like I said, any year's revenue is not necessarily reflective of the closing order book, because in our case, a lot of times chunky opportunities close in between, and we are able to deliver them as well, given our capacity.
Got it. So last question, sir. You told us about that Ideaforge has been granted 7 new patents. So can you tell us a little bit more about the product development and the opportunity size around the same?
So we basically get patent grants on technologies that we have protected, let's say a few years back. That's the way the process is with respect to patent granting. Granting is a testament to everybody in the chain finding that this is the first time something like this has been thought about in the world. In terms of the product development cycle, of course, there are several ideas that we have been working on over the last year or more, and many of them are in advanced stages of prototypes, which means that we'll have physical products that are going to prove the technology on ground.
Okay, sir. I have few more questions, but I'll get back to the queue.
Thank you. The next question is from the line of Vinamra Hirawat from GM Financials. Please go ahead.
Hi, am I audible?
Yes.
Yes, sir.
So congrats on a good set of results. I was just, my question was, could you give us some color on the two new drone categories that you're coming out with, the tactical drone from Make 2 and the middle mile logistics drone that can carry 100 kgs for 100 kilometers?
So essentially, the reason why we are building these two drone categories is to attack a slightly different set of use cases. Both of these categories are dual use categories for us, and they will both have applications in defense and civil market. The tactical drone category is meant to essentially offer best in class surveillance and payload carrying capability within a specific class of UAVs. This class of UAVs is almost 10 times heavier than the heaviest UAV that we build right now. So it's a massive step jump from where we are, but it is a drone category that will enable significantly long range and long endurance performance for various use cases, which will involve carrying sensors that can do mapping for a really long period of time, or carrying surveillance and imagery payloads that can see at targets much further away from the object, or in many cases it should also be able to carry a good amount of payload, which will allow us to do certain applications which were earlier not addressed by our portfolio. Then when we look at the middle mile logistics platform, it is expected to be perhaps 10 times heavier than even our tactical drone platform. But the objective there is to build a platform that can carry heavier loads upwards of 100 kgs to 100 plus kilometers. So broadly trying to ensure that we are able to take very heavy loads in extreme environments as well if required, to do logistics missions that were otherwise not possible. And a lot of parts of our country and other places are inaccessible, but can be really well served if we build a technology like this for those environments.
Yeah, definitely. Just as a follow-up, what is the rollout timeline you see of both of these drones?
So, like we had mentioned in our presentation, we are in advanced stages of prototyping the first platform on the tactical side, and of course it will take multiple prototypes to get to an optimized product, but we have started to at least get there now physically, which means a lot of the design stage is getting to a conclusion there. And then as far as the middle mile drone is concerned, we are in advanced stages of designing itself. So it will take some more time to get to prototyping phase there. However, it is expected to have a longer development time as compared to the tactical drone.
Got it. That's it for me. Thank you.
Thank you.
Thank you. The next question is from the line of Jatin Jadhav from Sahasrar Capital. Please go ahead.
Hello, am I audible?
Yes, sir. Please proceed.
Hello.
Yeah, Mr. Jatin, please go ahead.
Yeah, so sorry. First of all, congratulations on a really good set of numbers. I have two questions. One, I wanted to understand the market share which you presented in the investor presentation. You said 50% market share in India by FY22. How was this calculated exactly? Based on revenue or based on the number of drones that were produced?
This was based on revenue itself, and this was based on the government data that had emanated from PLI inputs that they had received when they had invited the first round of applications. So therefore, we have that vintage only available with us at this point in time.
Okay. And second, rank that you've been promoted to rank number 5 globally in dual use cases. What is that exactly?
So there is a entity in Europe that publishes a dual use and civil use drones ranking every year, where they look at all the drone companies in the world. I'm assuming they have fairly extensive coverage given their directory, and they look at performance of these businesses and come up with a ranking for these industries based on whether it's dual use or if it is purely civil use.
Got it. And since we are catering, I see a lot of other drone companies also getting orders from the defense side. So I wanted to understand currently our revenue, whatever is coming from the defense, what kind of drones do we provide to the defense sector of India?
These are meant for surveillance operations. So what happens is that when we look at any operations that is happening in defense or any other space, one of the most important aspects of that operation is getting intelligence in the first place to do any action on top of, right? So these drones in a way become the backbone of any operation that is happening. On top of that, these kind of drones are also used for assessing if, let's say, for example, an end effect has been taken or an end objective has been tried to be neutralized, then whether the effort was effective or not. So they are used for damage assessment. They are used for whether whatever was delivered to the target has been delivered accurately or not. So these kind of drones remain a bedrock of any operation on the defense side, and then all other kinds of drones, whether be it for ones that are doing kamikaze missions or otherwise, they are essentially augmented to these kind of systems to do the end effect. But surveillance drones become the bedrock of what's happening.
So are we, is it safe to assume we are the best in this class, particular class, in India?
Yes. In the two categories that we build in right now, we do offer best in class globally.
Okay, so let's say tomorrow a need of your particular type of class of drones arises. So is it safe to assume all the orders will come to you?
See, that is something which we can only comment on when we get there on the field. But we do believe that we have something that is very differentiated in this category. And it has been challenging to challenge the positioning there.
Got it. Thank you so much. That's all from my side. All the best.
Thank you, sir.
Thank you, sir. The next question is from the line of Venkat from 3 Sigma Financials. Please go ahead.
Thanks for the opportunity and congratulations on good set of numbers. Sir, the previous question was centered around the best in class. So I just wanted to understand, like, where does our strength lie? Does our strength lie in software or hardware? Because when I look at the patents, the patents are more from process point of view. They're not product related. So where does our strength lie?
So our patents are actually most of them on technologies, both on the software side and hardware side. And what we have done is we have been able to create a domain expertise around building very high performance drones with a lot of reliable execution based on the software as well as the hardware features that we embed. And a lot of autonomy is also baked into our systems because it allows the systems to take a lot of decisions for their own safety on board by themselves. So we have strength on both the sides. We make our own autopilot. That autopilot, including the embedded hardware, is entirely our own software code. We make our own ground control software. We make our own communication stack in terms of software. So many of the critical elements of this technology are all built in-house by us.
So my next question is, you were talking about third-party software solutions. You'll be provided rather. Ideaforge is going to provide third-party platforms. They can use the software. So is that the correct understanding? And if that is a correct understanding, so what kind of baseline would you look? Is there some kind of standardized operating system that these software solutions work on, or you'll have to custom develop for each of them?
No. So what will happen is that we are coming up with a marketplace. That marketplace will allow a lot of industry software elements that can plug into the data processing chain that is required from the outcome of a UAV. For example, whenever a UAV does mapping application, for example, what drones are doing in the Swamitwa scheme right now, they are taking high resolution overlapping snapshots of Abadi areas in the rural India, and that data is then imported into a processing software that converts it into a map, and then from that map one has to So I'm saying that what happens is that then the data that is being collected by the drone is put into a processing software, and that processing software comes up with the integrated map of that area, and that map is then further needed to be divided into the actual footprint of the houses that need to be given the property cards. So a lot of software technology can help automatedly cut those boundaries by looking at the footprint of the houses. And a lot of such technologies can be created, and our platform will allow users to bake in those specific technologies that can be put into a workflow and can deliver the result to the customer without necessarily needing further human intervention. So that kind of technology element is something that a lot of third-party providers can build, and we can offer these to the end customer so that end customer can get their results in the most automated manner and at the right cost.
So we are not decoupling hardware and software in that case. When you are talking about a platform, you are talking about both hardware as well as software.
Yes. For example, there is an innovative payload needed for a specific application, which we are not building at Ideaforge, and we don't want to build at Ideaforge for that matter. Then other people can build those hardware payloads that are doing, let's say, for example, a very specific gas sensing, or they are doing some very specific monitoring that otherwise is not something we are trying to build for. And then they can also build a software piece that can deliver the reports to the end customer. Our system will make sure that the entire data pipe is available for them to do the processing on. One, to first mount their sensor, then to do the processing on, and then in the end deliver the application to the end customer.
So we are going to give our APIs to them, is my understanding,
yes.
Right? And that would be a revenue stream for us.
Yes, exactly.
Okay. So my next question, if I can squeeze. Sir, since drone technology is continuously evolving and so many people are developing, are we kind of like partnering with somebody, where there can be cost sharing, or there can be some like M&A activity that, the people who are kind of like in advanced stages, we can leverage their technology and stuff like that. Is there some thought around that?
So we are always looking for innovative businesses that are building something differentiated and can add a lot of value to our customer base. We do continue to evaluate partnering with such companies. One example that I can share is, if you look at our partnership with Galaxy in building radar-based payloads, including a radar that we are prototyping with them for fog penetration, and another radar that we are developing with them for foliage penetration. So these kind of innovative partnerships is something that we are extremely keen on. We have also in the past integrated with Esri. So we are constantly on the lookout of various partnerships, and these partnerships can take any flavor going forward, including, like you mentioned, the need for investments or M&A.
Okay. Thank you very much. I don't have any further questions.
Thank you. A reminder to all the participants that you may please press star and one to ask questions. The next question is from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hello. Good afternoon, sir. Thank you so much for taking my question. Hope I'm audible.
Yes.
Yes.
Yeah. Hi. So just with regards to this one, I have one question regarding our revenue. So as you were saying, a lot of we can get a lot of orders that we can execute. They are not reflected maybe in the order book. So for the current 9 months, how many such orders would we have reflected that were not maybe reflected in our March 23 order book?
So let's say, for example, if you look at our March 23 opening order book, it was at close to about 190 crores.
Correct.
And if you see in between, in quarter one, we were at about 100 crores of order book, and that again shot up to 253 crores in order book, which is presently at about 175 crores. So you can see what I mean, right? That there are a lot of orders that come in between. They get billed also, and then we get more orders as well. So that cycle continues all the time.
Oh, okay. So just like I understand how difficult it would maybe to comment on the order book status, but then for us like analysts, could we just have some kind of a benchmark or indication that how could we help predicting the future flows or something that helps us, because the variability in terms of revenue is somewhere a bit difficult to model. So, could you just maybe help us with any indicator that you find appropriate that that can help us a bit?
Honestly, because I am not sort of tuned to that kind of thinking, I'm not really able to think about any specific idea at this point in time. But maybe we can discuss this at some other point in time.
Okay. So in terms of guidance, like, in terms of, maybe broad-based guidance, nothing very specific, 2 years, 3 years down the line, what kind of, revenue can we maybe foresee because with the new products coming in? Is it fair to assume that, we may touch 500 crores?
So it is not very, straightforward for me to give any number. However, what I can share is that from all that we have seen in the industry over the last few quarters and from our time in the industry so far, we have just started to scratch the surface of the market potential of this opportunity. And with the use cases that we are unlocking with every new development, for example, if you read our presentation, we had also indicated that we have started to see early usability of our products in inspection use cases as well, which is of the 4 important use cases, which include surveillance, mapping, inspection, and delivery. We were only doing surveillance and mapping so far. With unlocking of certain new use cases, the market potential keeps expanding, and a lot of this market potential is realizable in the short term as well. And some of it, like for example, when we build a new platform, particularly of a larger size, will get realized over the next 3 to 5 years horizon. So depending on the nature of the platform and the type of unlocking we are able to do, in fact, the whole platform approach that we have come up with is essentially to unlock the full potential of what our products can do in the market even today. Because it is not possible for one company to build every payload possible in the industry, nor is it possible for any company to build every possible software application that the end customers require. But by making and taking that platform approach, we are trying to accelerate our own entry into various industrial segments that our partners are willing to help us jointly address, because we provide that stable base platform. We provide a mature software stack that allows them to accelerate and focus on areas that can create a lot of value, as well as allows us to address the overall market chain that otherwise was not accessible to us till we would have decided to enter that space. So a lot of this is an effort to unlock both short-term as well as continue to prepare for the long-term advantages of the industry. And of course, we are also looking at the international market. So our existing products, existing platforms and their capabilities, wherever relevant in the rest of the world, is another strategy we are pursuing.
Thank you so much, sir, for the detailed answer. So just one final question, like in terms of our cost, currently as we were maybe hiring new employees and everything. So how do we just see our cost started going over? Like our employee benefits and other expenses would be fixed in nature, right? So they would not have a amount of variability in it, right? So we would be probably for every quarter spending around 30 crores. Is that a fair assumption?
Darshil, I think the variability will also be there because the company is in the growth phase. We, as Ankit mentioned, that we would be expanding our base as well across multiple geographies. While, as you would understand, that for our product development expenses, we capitalize them, so the hit won't be visible on the P&L. Only what get amortized over quarter to quarter is the numbers that will be visible. While as so to say, overall expenditures in terms of our rental costs and all have steady, there are no envisaged additional expenses that we see in the next coming quarters.
So what I meant, operating expenses would not be reducing, right? It would be at least currently stable or higher, right?
They would stay stable. I mean, obviously, whatever we need to produce in those expenses would be depending on the order book that we are trying to service for that quarter.
Okay, perfect. Thank you so much, sir. All the best, sir. Thank you so much for detailed answers. Thank you.
Thank you, Darshil.
Thank you. The next question is from the line of Mudit Kabra from Elara Capital. Please go ahead.
Hello, am I audible?
Yes, sir. Please proceed.
Yeah, thank you for the opportunity, sir, and really appreciate all the good things happening with the company right now. Firstly, I would be asking, sir, can you give us any numbers on the capacity utilization, maybe on quadcopters and fixed wing, and if not on specific and an overall number maybe?
Capacity utilization.
So right now we would be at about 80% of our capacity utilization for a single shift. Again, that peaks and reduces depending on the size of orders that we are servicing month on month.
Okay, thank you. And secondly, numbers on the number of flights taken till December in the current fiscal year 24.
So about 60,000 flights is what we had reported in the presentation as well, is for the financial year, and cumulatively that number has gone up to 420,000 plus flights with the end customers.
Okay. And if I'm not wrong, I think it is fair to assume that till next 1 or 2 years we are targeting up to 1 million, this number.
I mean, we have to set ambitious targets, and we are aggressively working towards making sure that the adoption of the platform is happening at the highest pace possible, because we firmly believe that the more the platform gets used, the more will the market expand, because most of our platforms are delivered for either a security use case or they are delivered for a productivity use case. And in both cases, as long as you are continuously being used, you are giving somebody disproportionate value. And that allows them to want to use it to their entire scale.
And with it, we are also seeing that our deployment base also is changing, and that also should help us get some more adoption in terms of total number of flights.
Got it. And lastly, sir, on the ESOP cost, the ESOP costs were lower in the previous years and it shot up in FY23. We were expecting to normalize this ESOP cost, but as you taking the picture of a good number of hiring which is coming, this number would remain at elevated levels in the coming years, right?
So basically, all in the last calls also we had highlighted that all large quantum of ESOP exercising and all has already hit our books. We don't see any large numbers coming in the subsequent time period. It will normalize around about 40-50 lakhs quarter on quarter.
40-50%. Okay.
40-50 lakhs per quarter.
Lakhs, sorry. Okay. Okay, got it. Right. That's all, sir. Thank you so much. All the best.
Thank you.
It may be higher. Yeah, it may be higher, but the way it gets delivered is going to be different.
Thank you, sir. Participants who wishes to ask questions may please press star and one now. The next question is from the line of Dipen Vakil from InCred Equities. Please go ahead.
Thank you for the follow-up opportunity. So I wanted to understand a little bit more about your North America operation, which you have entered recently. How has been the feedback from your prospective clients, and when do you see these geographies or the out of India geographies to start forming significant part of your revenues?
See, I do not foresee them to become significant very quickly given our revenue base, but it will at least start becoming meaningful in the coming year itself. And progressively they will start climbing to being significant. But at least in the short term, we are aiming to have them give us meaningful outcomes. But in terms of how the reception has been, I think our class of products or the performance that we deliver is quite unique vis-a-vis what's available in those markets. And therefore, we are seeing a lot of positive response at this point in time.
So if we look at the drone as a service, then North America operations, do you see it from a percentage point of view, do you see it contributing in a meaningful way, say more than, say close to around 10% or something?
No, not at least in the coming year.
Got it. So, taking a follow-up question on the capacity utilization. Sir, is it also in your DRHP you have given the installed capacity per day for your quadcopters and switch UAVs? So is it possible to give you an updated installed capacity per day for your products?
So Dipen, no significant changes happened in the capacity right now. We still hover around 5 in terms of our quadcopters and about 4 in the switch on a per day capacity for single shift. Since we have not really gone ahead and done any capital investments for capacity enhancements.
Got it. And you are functioning on a single shift. So in case if an additional requirement pops in, you will just increase your shift from.
Yeah, we would look at maximizing our current infrastructure itself before we venture into any capex investments.
Got it, sir. Got it. Thank you so much for answering my questions.
Thank you. The next question is from the line of Pratir Adhikari from Ratnabali. Please go ahead.
Thank you, sir, for the opportunity. Sir, my understanding is that there are different categories of drones, and different companies are targeting different companies with different types of drones to develop. And you said that you are making some drones which are differentiated than others. So in your category of drones, how many people are there? How many companies are there who are trying to develop this?
So what happens is that, Pratir, in general, any category that has been around in the market for a few years, you will find a number of people trying to compete in that category. What we try to do is, we try to make products that are differentiated and better performing even in that in the same category. So you will have a lot of people who are building products in the same category, but probably it is challenging to meet our best in class in terms of performance and certain other factors. Right? So that is how you continue to retain the edge in each category, because each category as it gets established does have several people wanting to build for that category. Similarly, for the new platforms that we are building, some of them we may be entering categories that do exist, but we will build in our capabilities so that we can be differentiated within the category.
Okay. And whenever you are developing a drone, I guess optoelectronics is a major part of it. So my question is that how much you are dependent on foreign equipment, and does this kind of a thing like optoelectronics you procure from outside or domestically established?
So we do currently procure optoelectronics and certain other sensors from outside. However, we also continue to seek opportunities to build them in India or get them built in India. That is also something that we parallelly keep exploring, and that's an effort we do for every subsystem that we have in general. But yes, even for optoelectronics, we do that. We ensure that we are always on a lookout for localization as well.
Okay. Sir, what is your sustainable EBITDA margin, which is right now hovering around 20-30%? It's fluctuating. What is the sustainable margin for the year when you will have orders placed and you will execute?
So our view is that they should hover anywhere between 25 to 30%, as is visible. I think that's what is our expectation at this time.
Okay. Okay. Okay, sir. Thank you for.
Thank you. The next question is from the line of Rajat from Incred AMC. Please go ahead.
Hi, am I audible?
No, sir, your audio is not clear. I'm sorry.
Is it any better?
Yes, sir. Please continue.
Yeah, hi. Thanks for taking my question. So just one question. On your core operating margins, I think you are reporting only 21-22% kind of a margin. If I include other income, obviously that shoots up to 28%. I just want to understand what has changed over the last 2 years, because at a lower sales profile at 160 crores in 22 and 190 crores in 23, you were doing a much higher margin, the 47% and 26%. And now over the last four quarters, that margin profile has come down to 17-18%. So just want to understand what exactly has happened here.
So mainly what happens is that a lot of it depends on the contracts that we have closed and the nature of those contracts. So, for example, the contracts that we had executed in the previous year, they were slightly higher margin contracts. The contracts that we are executing and delivering on in this year may be of the our performance is basically reflective of those contracts that we had backed. Now, depending on the nature of the opportunity and the type of UAV that our customer needs and the competitive environment, we have to ensure that we balance all of these three things together when we are doing our bidding. Some of these bids may be really old as well.
So, Rajat, some of these are also actually the product mix that we are trying to distribute between customers, and the complexity of the user requirements is where the pricing differentials are also there contract to contract, and that's the reason why there's a certain shift that you see.
Right. So is it fair to assume that the competitive intensity has definitely increased over the last 2 years? So typically, when you bid,
competitive intensity has gone up, which is fair given the the buzz around the industry. Having said that, whenever we are looking to pitch something at the cutting edge, we still find that there isn't as much competitive pressure. But where a category has been established at moderate performance levels, it is bound to be competitive there.
Got it. And on the other expenses front, can you tell me what is the breakup in terms of R&D? How much is R&D spend right now?
So our other expenses presently do not include R&D expenses. R&D expenses, actually product development expenses in our case, they are typically capitalized. And the other expenses are all of the other expenses in the company.
So there is a mix of, provisions for warranty expenses, ECL, your manpower recruitment costs is a mix of what you see in the other expenses.
So, okay, so there's no R&D cost in the other expenses.
R&D is what we capitalize under intangible assets under development.
And how much would that be in terms?
So right now, because the balance sheet numbers are not audited and not published.
Sure. Okay. Yeah, that's it from my side. Thanks.
Thank you. The next question is from the line of Vinamra Hirawat from JM Financials. Please go ahead.
Hi, I was just wondering if you could give exports as a percentage of your total sales.
Vinamra, it's not meaningful at this point in time. Probably in the next year, we'll start looking at a meaningful division over there.
Okay, so I can just assume like under 2 or 3%?
No, much lower than that also.
Much lower than that also? Okay.
Yeah, we just started seeding the market, Vinamra, there. So.
Got it. Thank you.
Thank you. Ladies and gentlemen, in the interest of time, that was the last question for today. I would now like to hand the conference over to Mr. Ankit Mehta for closing comments. Over to you, sir.
Thank you so much, everyone, for being on the call and patiently listening to our Q&A as well. And I wish everyone a very, very good day and a great next quarter as well for everyone. Thank you.
Thank you, members of the management. On behalf of Ideaforge Technology Ltd, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.